Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Monday, April 20, 2015. Inside the numbers tonight, we're going to discuss the SPY and the E-mini contract. We'll talk some numbers and some targets and support and resistance levels. We'll discuss crude oil, may have some workings developing there, some potential trade setups developing, gold, interest rates in the bond market, and we'll wrap it up with the U.S. dollar. Okay, let's go to the SPY. This is the daily chart. And of course, right out of the chute today, we had a rally. The markets were up when we woke up this morning, and they just went higher. It was kind of a gap and go day. And it's interesting because on Friday, I mentioned that it was the Friday crescendo to options expiration week with the down market. And it was more manipulation in my mind than anything else. Nothing's changed between Friday and Monday. Nothing's changed between Thursday and Monday. And whether it's Greece or whether it's this or that, it's all nonsense. You know that by now. Nothing's changed. So what I interpret this as, this is not mathematical, this is not technical, this is experience and common sense. This is a bullish market with an undertow of bullish behavior. The sentiment is bullish. People want the market to go higher. They're long the market. They are wishing it higher. Listen, mutual funds want it to go higher. Hedge funds want it to go higher. Institutions of any sort want it to go higher. People on pensions want it to go higher. People with 401ks want it to go higher. Everybody wants it to go higher. Now, I'm not saying that's the reason it goes higher. I'm just saying when that happens and there's no negative news that's able to turn the market on a dime or turn the market in a negative direction for any sustained period of time, then you have to accept the fact that we have a bullish undertow and there's a high likelihood, that we're going to see higher prices within the next couple of months, significantly higher than we are now. Okay? That's not to say we won't have a down day. It's not to say we won't have a down week. We may have a down day tomorrow. Tomorrow morning may be down by 5 or 10 points in the SPY or the S&P 500. Who knows? We don't know day to day, hour to hour all the time. But what I do know is that the market is bullish. And when you zoom out a little bit and you look at the weekly chart, you can see there's absolutely nothing wrong with this market. In fact, if you drew an up line and then a diagonal line or a horizontal line down, slightly down to sideways, this is an immensely bullish pattern set up here. Anytime you go up and then you consolidate sideways, you're setting up for another up move, right? So let's go to the monthly chart and just zoom out a little further. Okay? What's wrong with this market? Nothing. Same thing. You have a big up move. Now you have 1 month of sideways, 2 months of sideways. What are we going to have? 3 months sideways and then higher or just higher? We'll see. Who knows? Okay. We don't know exactly yet. What I can tell you is that the market is bullish. Okay. I know there's folks out there that try to short every rally. This is not necessarily a sell the rips market as much as it is a buy the dips market, right? The buy the dip crowd came in this morning. We're in the buy the dip camp. I've been telling you that for weeks. Any down move, any significant sell-off is to be bought for higher prices later. I've been telling you that for weeks, okay? So nothing's changed from that standpoint. What's tomorrow going to bring? Well, I don't have a definitive upside target for tomorrow, and I don't have a downside one either. I do know that the market most likely is going to be susceptible in the morning to be down on the S&P, 5, 7, 8, 10 points. But that's nonsense. That's nothing. That turns around by 10 o'clock and then we float higher. Or unless there's some kind of event that's sending the market down on any kind of volume, that's different. But I don't have an indication for tomorrow per se. So our targets are going to remain the same. We're going to have hard and fast support at 207.50, but you're going to have a lot of support way before you ever got to 207.50. Okay, you're going to have support at 208.63, which is the 50-period moving average. I mean, you're going to have tons of support tomorrow. This is, unless something happens when you wake up in the morning, there's no reason for the market to go down other than an event taking place, which obviously could happen, right? On the upside, you weren't able to get through Friday's closing price. Okay, the closing price from Friday was, let's see, 210.37. The high today was 210.24, I believe, if my memory serves me right. Go over to the other chart. That one never works. No. Yeah. Oh, okay. Sorry, folks. I just got to slide my chart over. Okay, so the close today, or the high today, was 210.25. 210.25. So we weren't able to get into Friday and Thursday's highs, and we may or may not get there tomorrow, but there's a lot of resistance up in the 2104, 2105 area. Now, I talked about that last week, so this is an important level. And what I said last week holds true. If we can get hourly closes, let alone a daily close, above 2105 on the S&P E-mini, this is the S&P E-mini number I'm giving you. Let's go over there so I don't confuse anybody. I'm sure it already did. 2105 on close, first hourly and then a daily close, is very bullish for the market and is going to promote more upside, higher prices, and that's pretty factual. So that's what we're looking for. Right now, we're kind of in that range. We're in no man's land. You know, we're hovering right underneath 2100, and we need a pop over and above 2105. That's the number. All right, let's go over to the gold market. The gold market had some downside pressure today, and I really didn't love to see that, but as long as we continue closing above, let me see, back to my notes here for a second. Bear with me. 1191. Okay, 1191, which we did. So as long as we remain hourly and then daily closes above 1191, that's fine. Closes below that level and there's trouble. And I'm going to leave it at that. I'm looking for higher prices, but I don't like the behavior. A close below 1191, probably for 2 hours in a row, I'm probably gone from gold, and I'll just reassess. And that's not to say can't buy it back later, another day, whatever. I just don't want to get caught on the wrong side of a wishy-washy. I'm getting wishy-washy in gold. I have to see upward movement quickly, or I'm going to just assume that there's something wrong and it's not doing what it's supposed to do. So 1191 is my line in the sand. Let's go over to crude oil. Now we're going to be in the June contract for crude oil, but it looks pretty much the same as May did. And you're hovering above the top end of the trend line that we had, or the trend line on the top end of what used to be a channel that we drew here. Now, this is bullish behavior. Now, if we get back inside and below this trend line here and begin to work downwards, that's a different scenario. But for now, as long as we stay above this line, which is right at about 57.19, 57.20, actually the number is, this is the high, 57.19. As long as we stay above 57.19, I think there's higher prices coming. How high? Okay, so here's where it comes in. If we can get hourly closes around 58 and a quarter or higher, 58 and a quarter or higher June contract, okay, then I think we're going to hit 60 and a half, maybe higher, okay? That's a nice trade again, okay? 58 and a quarter hourly closes, I think brings us to 60 and a half, okay? June contract. Hard numbers, okay? But you got to start closing hourly above 58 and a quarter. If you do, I think it's clear sailing to 60 and a half or higher. All right. Hopefully that's helpful. Let's go to the TLT. All right. The bond market. So bonds were down, yields were up today. Okay. Not reading anything into it. Again, we're in the middle of a range. Top end of the range, bottom end of the range, middle of the range. My bias would be that we eventually will break up from here, okay, more than a bread box. But, I'm not seeing anything definitive. I don't have any definitive cycles, topping or bottoming, and I don't have the market telling me what it's signaling, or it's signaling me what it's going to do. So right now we're still going to leave it alone. And when I get a signal, we'll bring it up here, we'll talk about it, and we'll give you a trade accordingly. But right now there's nothing going on in the bonds. But let's go over to U.S. dollar, because with the U.S. dollar, I do have an indication. Now this is interesting because something's conflicting, and we'll see what happens over the next couple of days and how it plays out. I have higher prices. I have my work tells me there's higher, my cycle work tells me there's higher prices coming in the US dollar. Okay. Now, normally, under normal circumstances, you would expect the oil market, crude oil market, to come under pressure with higher dollar prices. But I'm seeing bullish behavior in crude oil, and I also have an indication because of a cycle bottom, I have higher prices penciled in for the US dollar leading into the middle towards the latter part of this week, at least the middle of this week, okay? So it's interesting. I have higher prices for the dollar. I'm looking for higher prices in crude oil. Those two don't always jive, but sometimes they can. I'm just going to leave it at that. It's just something of note. I'm not reading into it yet. I'm just saying it's a little bit suspicious. But that's everything I'm seeing in the dollar, and that's everything I'm seeing in crude oil. Okay, if the dollar doesn't go higher by, late tomorrow, early Wednesday, then I'm probably wrong on that one. But the dollar should move higher. Okay, higher prices in the dollar should be coming, and that should mean lower prices for the euro, and could put the pressure on commodities. We'll see. But you can be long the U.S. dollar. I think that's all I have for tonight. Hopefully it's been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.